Hello. Hello. Hi. Welcome. Good evening. Welcome. Namaste. Welcome to Blockchain E-Weekend in association with Oro Pocket, media partner CoinGate, and of course brought to you by Indocument. Well, my name is Akash. I'm new, as you can see. Let me tell you something about myself before we kickstart the event. I'm your new host, a new face. I'm an ex-IT professional. I have worked for like 8 years in the field of IT industry, and then I left the IT industry, and I joined Canvas Lab Club, and now I'm handling production operations at Inblocks Network. So, as you know, every week we have a new theme. Then the topic for today's discussion is banking with cryptos. But we'll begin the session. I'll tell you something more about myself. I just want people to join in, and I want the crowd to be warmed up. So I'll tell you, I'm the host for today's webinar, and I have hosted shows before at Canvas Love Club and at corporates as well. And simply because I love hosting, as a child, when I was like 4 years old, I wanted to get married to a beautiful wife, and and host people at home because I had seen that my parents doing it. And 30 years later, guess what? I have no wife. Forget about a beautiful one. I am still single, okay? And semi broke. Forget about being rich and able to host people. I'm not even hosting much. Seems like dreams are not coming true. But I have hope because I hope through crypto now. I'm a strong believer of crypto, and if you guys also believe in crypto, you can show some energy. The emoticons are right down there. You can show some, some smileys. You can just, clap and whatever you want. Show some energy so that, because if the energy is not there, I don't start the show, all right? It's in my power. Today, I am the host. I won't even bring on the speakers, okay, if I don't see the energy. And no one can do anything about it. So let's have some, let's have some energy. Everywhere where we are sitting, we can see some, I want to see virtual claps when I call on the speakers, just like exactly what happens in a physical event. So we will try to replicate that as much as we can. As we all know, the topic for today's discussion is banking with cryptos, and we have heard many stories about the ills of banks and banking systems while learning about the birth and growth of cryptocurrencies. While we keep witnessing the failure of fiat and centralized banking systems, there's a new banking system emerging from within the crypto space, and that is what exactly we'll be talking today with our speakers. First, let me introduce the panel now. I will introduce Mohit. Mohit,
Hey everyone.
to the audience. Mohit is a co-founder and CEO at Oro Pocket. Oro Pocket is also a partner, and Oro Pocket is giving a giveaway, free giveaway to those people who will ask the best questions. The question tab is right on the side, on the right hand side. You can post your questions, and the panel will select the question. They will give it. They'll get a reward. Mohit, as I said, is a co-founder and CEO at Oro Pocket. He's a serial entrepreneur with focus on making technology accessible to masses. Next up, we have Darshan. Darshan, you can say hi to the audience.
Hello, everybody.
Darshan is CEO at Bank of Hodlers. He has worked in the investments team at NBFC, where he issued real estate-backed loans worth $100 million. Wow. And then finally, we have Shantanu Sharma. Shantanu, you can say hi to the audience. Shantanu needs
Hi, guys.
introduction. We all know Shantanu. I know Shantanu as a very knowledgeable person. He's a Wikipedia himself, all right. When it comes to talking about blockchain, crypto, I'm learning from him. He's awesome. He's not hosting today. I've been given the opportunity. I've taken his position in power slowly. I'm learning because through him. So yeah, that's pretty much about it. And so if we are seeing good enough number of people, we can just start the proceedings, right? Are we good? Are we good, guys? Just give me some more emoticons. We are all warmed up so that we can start. I will bring on Mohit first. Yeah, I can see a flurry of emoticons coming in. Very nice, wonderful, nice audience. I love a nice audience always. So now I'm going to bring on Mohit on stage, and Mohit will be speaking for the next 15-20 minutes. All right, over to you, Mohit.
Hey everyone. So thank you so much, Akash. Thank you, Shantanu. Akash, I hope that you have better luck with e-weekends than you did with Tinder. So let's hope you find somebody. So addressing the issue at hand. See, right now, economies all around the globe are in a weird shape. Like you see unemployment's on a rise, but markets are like going up. If you talk specifically about India, just in the last 7 8 months, four banks have collapsed. One major bank was on the verge of collapsing, and every time this happens, millions of users lose their life savings. Right? We're only insured up to 5 lakh, and even getting that money is a challenge in itself. Right? So the banking system is broken in several ways. Right? Now, not just this factor, the fact that the money that we keep in our bank loses its value every year without any fault of ours, right, due to inflation, it's quite traumatic, right? And now there are several banks that are offering negative interest rate outside of India, and trillions of dollars are being parked there, right? So it makes no sense. It's like 2 plus 2 is equal to Qutub Minar. It doesn't make any sense, right? And the worst thing is that these banks charge like abysmal fees for interbank transfers or for taking credit cards. If we talk about the largest provider, Stripe, even they have a 6.5% fee when you take into account the currency conversion rate. So that makes no sense. There has to be a better solution to deal with it, right? And cryptocurrency has brought us with that unique opportunity to solve these problems at scale, right? So it's not like that you have to do a test in a small bracket with a small set of people. There's already a large group of early adopters who are trying on these cryptocurrencies to solve these problems, right? So let's talk about Bitcoin first, the biggest cryptocurrency so far, right? Now, Bitcoin is absolutely amazing independently. It has a great following, great set of developers. It has already tested the time, and it has stood out, right? It has never been hacked, never been. So the thing with Bitcoin right now is that even though with all these great features, all these following, not the requirement of any central body to control it, it still cannot be used as money right now. It's not a store of value. Something that has a jump of like over 30% in a day on bad days, 20%, 5%, it doesn't make sense, because if I am giving you money in the form of a Bitcoin, I would rather that it holds its value. Otherwise, I'm going to feel that I shouldn't have made that purchase, right? It's not a medium of exchange if the value is not relatively stable enough. If we talk about the 2008 crash and where we stand right now, US dollar has actually held its value in terms of a medium of exchange, right? With Fed pumping in all the money. And so Bitcoin, even though is an amazing technology, it still has those gaps. People are trying to avoid them. People are trying to accept them. But I still personally believe that every time I have made a purchase via Bitcoin in the last 5 years, I've always regretted it sooner or later, right? So then this evolved further to decentralized finance, and Darshan is a far better speaker to explain details there. But I still see decentralized finance as a small project. It just has $1.5 billion right now that is locked in it, right? There are a lot of security loopholes that need to be fixed. The throughput needs to increase significantly, even if one large community has to adopt it. Forget about the entire generation using it, right? There were some good projects lined up that couldn't even see the light of the day because of the regulation changes. And then there are these hacking attempts happening where like 300 plus bitcoins go away, 30 bitcoins go away, right? Things like that actually doesn't inspire a lot of people to put their life savings into it. So there had to be a better way to look at it. So we wanted to bridge this gap between cryptocurrencies and the uniqueness that they offer and the traditional banking system, something that the people are able to rely on. So that is when we started developing OroPocket. So using OroPocket, users can right now invest in gold and silver. Now these are tokenized, built on Matic, and would be soon trading on exchanges as well. So you can invest as little as 1 paisa. But the idea here was that instead of you keeping your money in the bank where the banks can gamble with it, right? You get to be your own boss. You get to be the master of your finances. All these assets are 100% backed by physical gold and silver and are kept in multiple storage in different countries. So right now we have 3 vaults. We have one in UK, one in Switzerland, and one in Singapore. We'll be starting with our India vault very soon, right? So all these assets are 100% insured and they fall under bailment. So tomorrow, if OroPocket were to shut down, you would still have control of your money, of your assets. These are insured by Marsh Limited, which is a $30 billion company. These are held by Garmerly Limited, which has over $3 billion of asset under management, right? So we have tried to make sure that you never lose out. Apart from this, we've tried to also give you all the features that you already get with your bank. So we have partnered with MasterCard to offer you a debit card using which you can shop online, offline, or even withdraw cash at the ATM. So imagine that you're going to a restaurant and while you're ordering, you're eating your food and all of that. Until that point of time, your money is still an asset, and only when you take out your card and they swipe for that transaction does it convert into fiat, right? So you don't have a depreciating asset in your bank anymore. You get to be your own bank. Another tool that we are working on is instant global transfers. So I believe that with the rise of these neo banks, with the limitations of the traditional banking system, and with the power that crypto has evolved to, I believe there is a huge vacuum that is created that needs to be filled. We are trying to fill a very small portion of that. We see a huge opportunity, and the definition of whether crypto should be legalized or not, whether blockchain is legal or not, they're all moot. If you have a good project with a good number of following, if you're giving employment to a good number of people, there is no reason for the governments to not support you. Of course, unless you're doing something ethically completely wrong, right? I believe there's a huge scope there. So don't try not to hold yourself back. Try to build on these projects. Try to innovate. These banking industries have not been innovated in decades. The last big innovation that we saw was a plastic card, and that was decades back. So this does require evolution. So that is what my firm belief is. I'd be happy to answer any questions that you have. I think I've taken a lot of chain of thoughts. Let's see where the discussion is going.
Yeah, one question I had, Mohit, is, while we get on to Darshan in next, is the idea of decentralized banking. I think, probably if you can keep this as as a model of a thought, a thread in your mind, and probably when we finish off with Darshan, we will also, ask his perspective on that as well. But this is something which has been going on, so I thought I'll just leave a thought here and probably we can pick up the thread later on as such. Akash, yours.
All right. Mohit, as of now, we have no questions yet, but yes, sooner or later we will have some questions, of course, coming in from the audience. We'll see, and we will come back to the quick Q&A part later on, depending on whom the question is addressed to. So I'll now call Darshan on stage. Darshan, be ready. I'm just calling you on stage. Over to you, Darshan.
Hi, everybody. Thanks for joining the call and conference today. I just wanted to not zoom out to 2008 because I think 2008 was very different from 2020. 2008 was a problem with the monetary system in itself, and I think it led to the phenomenal invention of Bitcoin and blockchain, and has created tremendous value since then. But in 2020, the underlying problem is a health one and a government one, where we're not prepared for a pandemic, and not a money problem. We're treating money as a solution to the health problem by artificially inflating our economy. Typically, your stock market and other indexes are supposed to reflect how the underlying economies are doing, but that disassociation has happened primarily because of the stimulus available in the market. And we see market crashes as a bad thing, but they really aren't. Market crashes weed out the weaker businesses and in turn leave a vacuum for stronger businesses to survive, consolidate the market, and new innovative companies getting additional capital from there. And unfortunately, since the last couple of downturns, we're not letting failed enterprises fail. A classic example would be what happened with banking in 2008 in the US and 2019 and 2020 in India, unfortunately. We've bailed out more than one bank, and I think the government's job of socializing the downside while privatizing the upside of risk is going to weaken the Indian rupee far more than we currently are imagining. And which smoothly transitions me to the following, which is okay. Now that I'm sitting in India, what do I do? And I don't know why Mohit's experience was such that every time he bought Bitcoin, he regretted it, because my experience was such that every time I bought Bitcoin, I regret not buying more. And I think the 2017 boom was many enthusiastic people directly getting into the space because of um, the appreciation in the price, which was not necessarily correlated with the innovation. And I think ICOs are the wrong way to do financing for companies. I think the right way to do it, at least the best system that we have, is venture capital. And yeah, we're very much going down that path too. Now, what I am a little concerned about is using a system of gold or any other asset that has counterparty risk when you don't have to take counterparty risk. If you are redefining banking from 0 to 1, I think I would rather opt for a system with as little third-party dependencies as possible. I think that's what crypto brings to the table, and that's what a lot of us are bullish about. And that's the ethos of the Bank of Atlas too. Although we are centralized today, the long-term intention is to be decentralized over time. And more than that, enabling the decentralized tokens to be bankable no matter where you're based out of, no matter what the counterparty, no matter what the acceptance rate of the counterparty is. So I also have a different opinion on the way acceptance is government acceptance for different projects, which is governments don't necessarily back the best projects all the time or the best technologies. It's not in their incentive to do so unless they're benefiting along the way. Although we see that the governments are supposed to be employed by the people and they're supposed to be representing the people, there have been situations where that correlation tends to deviate. A good example would be in the 20th century, there were more than one situations where gold was banned. And of course, gold was banned primarily because people were holding on to gold. They did not trust fiat. And that was the earlier days of moving off the gold standard. And you could say that was a necessary push for people adopting paper currency. But it came at the downside of people being arrested for holding on to their assets. I think that's just ridiculous. And what, 50, 60 years later, it's all okay again? Like, what are we doing here, you know? So no matter what your government may say they might represent, you know for a fact that if they're not allowing you to hold the asset class that you want to hold, be it gold, be it crypto, be it anything else, they're not 100% aligned. I just wanted to bring this to your notice, and it's government exists to as a point of friction to possibly balance out and create good for everybody at a whole, but not necessarily the people who save. The people who save indirectly end up paying for the people who don't in some shape or form. So if you fall under the category of the people you save, it's in your best interest to invest in the best asset classes or the best portfolio, irrespective of what the government actually tells you to do. Now, I'm not urging people to break the law here, but the fact of the matter is there is none. So you can do whatever the heck you want as long as you're not circumventing your $250K a year, moving money out, as long as you're fully declaring how you're managing your capital, and as long as you're paying your fair share of taxes. I think yeah, you have the total flexibility to do whatever the heck you want. Don't let anybody tell you anything else. And if somebody wants to tax you, that's fair because you are reaping the benefits of the system. But like your post-tax bottom line is what matters anyway. So optimize for that.
Okay. I like the last call you made. Optimize for that. Optimize for that. I think people will really have to understand how do you end up optimizing my own saving via cryptos. What do you say, Darshan? How do I really go about optimizing as an individual?
Well, you start by not jumping with 100% of your capital in the crypto space. As
Okay.
Mohit rightly pointed out, it's quite volatile. And we have the thesis that volatility is going to stable out over time, but we're still very far from that. If you looked at 5 years ago, it was the crypto space was a lot more volatile than it is today, and that is because with more participants, with more institutions coming in, capability to sensitivity towards market movements while zooming in tends to reduce. So volatility is going to come down over time. I think a good way to get into crypto is maybe put a very small amount of your capital regularly over time so that you dollar cost average your portfolio. And I would strongly recommend doing research on why the crypto space is top heavy. It's top heavy for a reason, guys. Let me just come out and say that. If you look beyond, let's say, I don't want to be too harsh here, but if you at least look beyond the top 20 tokens, there are very good reasons why they're not in the top 20. So you have to know that more often than not, you are not an above average investor. And with that truth, with acknowledging that you don't have a 20 or 25-year investing experience and a deep and nuanced understanding of cryptography, you have to know that adjusting your portfolio for risk is everything, and that can mean averaging for price to counteract day-to-day volatility, and possibly getting exposure in the right asset classes, buying an index, and possibly letting let I don't want to say this, but because then I might be sounding like I'm supporting mutual funds, even though I don't own any and I don't believe in the concept. But I do believe in index funds. I do believe in instruments that don't charge you middleman fee wherever possible, because if you look at how those fees actually end up compounding to your bottom line, it's ridiculous. So the difference between a mutual fund and an index fund, when it has the same underlying over a 30-year horizon, can be 2 to 3 times different in your bottom line. You may end up investing, let's say, 100 rupees, and you'll end up with 50% of the capital, or maybe 60% of the capital, just because you paid that 1 or 2% management fee every single year. So invest in an instrument with as little intermediaries as possible, dollar cost average, invest in the best assets, and I would strongly urge you to not take positions on a daily basis. Don't track price. I rarely check the price of any asset. I don't know what any crypto is trading at, and I don't think most of us should know what the price of Bitcoin is today either.
Yeah. I think I agree with you in many ways. If you track prices too much, then probably we end up having a bias of some sort, or maybe some sort of an inclination to maybe we get fixated of some sort to a particular instrument. Okay.
I think Warren Buffett has a very good statement. So you don't buy anything unless you have the assumption that today you buy it, the market's closed for 10 years. Can you sleep at night knowing that you own this asset for 10 years? And if the answer is no, don't buy it in the first place. So you have to really think about the altcoins you're buying. You have to think about the small cap companies that you may get exposure to. You have to think about the debt instruments that you're getting exposure to. And if you can't hold on to them for 10 years, don't buy it. And that's where gold is a phenomenal instrument as well, right? So I know I may have come across saying that, there is one asset class better than the other. That's not what I'm saying at all. I think the best way to protect your asset is to diversify, and not diversify to a point where you're getting exposure to shitty assets, but diversify, adjust your risk, and hold precious metals such as gold, hold indexes of extremely healthy economies, possibly hold debt in a very strong underlying, if you can find that, and if you can't, maybe dollar cost average index funds. That's it.
See, I think when you look at banks per se, I think if you look at banking, it's more to do with the common person. The common person may not have the inclination to understand index funds or indexing, or the small nature of the intricacies of what exactly a bank is all about, which probably a proponent like Darshan Batija or Mohit Madan may know. But and how do I convince? Because see, it's all about savings. Banking, people want to put at the bank, one, money remains safe, and funds are safu. And but then, how do I convince a customer that yeah, you should bank on cryptos or bank with cryptos. And this goes both to Mohit as well as Darshan both. I mean, we are talking about a common man, not somebody who really understands the intricacies.
Mohit, you want to go?
So, Darshan, first of all, I agree with all the points that you have made so far. I think there was some confusion. So, I have never regretted buying Bitcoin. I have regretted spending Bitcoin.
Ah,
Every
same here.
time I've spent Bitcoin, I've regretted it. So, the idea here is, what do we define banking? Now, I personally define it as saving plus spending, right? Now, when you are talking about cryptocurrencies with this huge volatility, you cannot assign or you cannot actually trade in it and buy things with it, right? Without that remorse coming in later, right? The one that we've all experienced, right? So we've tried it all. Ki ek bar Bitcoin se kuch leke dekhte hain, right? Because it was fun, but I'm not gonna do that every day. I'm not gonna give up my precious Bitcoins, right? As simple as that. So
Zeppe used to have a system within their wallet in the beginning days where they said you can pay the Airtel bill,
yeah.
and we've done that.
Correct, correct. So we have all tried it for buying servers, for all these Zeppay and all of that. See, what I firmly believe, Shantanu, as you had pointed out, is that the second point is savings, and users ultimately are not very well versed in financial matters, and because these are things are not taught in school and all, as we were discussing earlier, right? So that is what the bridge that we are trying to do. So on Oro Pocket right now, we are doing a POC with gold and silver. Very soon we'll have cryptocurrencies there. Very soon we'll have mutual funds and other asset classes. The idea is you should not have your money in fiat. You should have them in assets and then use the card that we are offering you to shop online, offline, or even go to an ATM and take out cash. Right? So the idea is you build on these assets. You be your own bank. You don't have to rely on somebody. Darshan rightly pointed out that if there is a possibility of taking out an intermediary, why would you rely on and specifically bank on it? See, I believe if you're actually using the banking methods for buying and selling things, for buying groceries, for your medical expenses, you need to have your money parked in a way that it doesn't lose in value every year. Majority of the funds in India are parked in FDs, right, and RDs. Yet we have seen time and again that they have proportionately not broken even the inflation rate as compared to the US standard, right? And what happens over a period of time is that your money increases, but its power to buy things decreases, right? So we're trying to make sure that the user avoids that. We're trying to make sure that the user has a better way to park their funds. Addressing the last point of 2008 and 2020 that you had initially brought up, you were 100% right. It's way different. But the similarity is in 2008, money was pumped in, right? That money was supposed to be taken out by the US Feds so that system could normalize over the decades. Actually, it was for a decade, but now over the decades. Now they've pumped in more money. We don't know the impact that it will have in 2024 and 2025 because now we have the money that was coming in for 2008 and now for this pandemic money that they have put in with all the citizens getting a certain amount. I firmly believe that money as a whole is losing its value and we need to bridge that gap quickly, and that is why I believe that if we were to build startups around it, if we were to hire people around it, there are multiple innovative solutions that can be built. We are at that stage. With 2008 crash we saw Bitcoin being born. I believe with this pandemic we can see multiple such products being born that could make people averse to just keeping their money in the bank.
Yeah. So I think, Mohit, you summarized the conversation really well, picking up from what I spoke about. But I'd just like to clarify one thing. If I think you did, but let me just say that one more time. The objective here is to increase savings over time. And when I say savings, I mean inflation adjusted savings, if possible. Now, inflation with rupee, inflation versus the dollar, or inflation with dollar versus its historical value. Like you have to factor all of that in. But like most people may not understand how inflation work, although I believe they should. But like step one is not probably trying to understand inflation. I think step one is understanding the equation of money retention. which is you earn money and you build wealth, you pay as little of it as possible, and then whatever the rest is, you hopefully make that compound in some shape or form. So it is money coming in and very little money going out possibly, and whatever is remaining, make sure that grows over time. Now, if you're looking at money coming in, that is a function of you creating some sort of an upside for yourself, either in the form of a salary or starting a business or doing something of that sort. But let's focus on the second objective, right? Which is minimizing expenses. Now, there is it's very easy for you to see which banks have your back or which intermediary or counterparty has your back based on the number of touch points they actually charge you money for. Well, they are managing your money after all. They're making a return on it. So why do they need to possibly charge you a yearly fee for your card? Well, they don't have a cost to that card. Mohit and I know that they don't have a cost to that card. So why are they doing this? Additionally, why do they charge you a minimum balance? Why do they charge you fees for making an FX transfer? Well, because they can. That's the truth. Because they can, they believe it helps their bottom line, and that's why they do it. And it's coming at the cost of you. It's a zero-sum equation, unfortunately. So if it is a zero-sum equation, you know that you have to possibly pick counterparties who have your back, who don't believe in charging you fees wherever possible. So if there are two banks out there, all things equal, one charges you 500 rupees a year and one charges you 1,000 rupees a year. If all things are equal, probably go with the one with 500 rupees, who charges you 500 rupees. Now this goes without saying, but it's not as simple as that. You end up paying at every touch point. You don't actually end up paying. You don't see 500 bucks leave your savings account, but rather if you make an international remittance, they take maybe 2.5 or 3% of the currency conversion, and they charge you for that. So instead of you maybe booking a 75.5 on the dollar, you'll end up booking a 77 point something. And people may think that stablecoins are overpriced in India. That's actually not the case once you factor in cost of moving money out. Trust me, I've looked at it. So the reason why there is a markup is because it's so damn hard and expensive to get money out of the country. And that's by design. It's by design by the centralized authorities, and it's also by design even because banks know that you can't go to a third party. You have 10 options, right? If you have a bank account with two of them, you have two options. So they got you in this transaction. So well, you want to choose the counterparty that has your back. You want to choose the most lean counterparty. You want to choose the best insured counterparty, and that's why Mohit has focused so much on getting his underlying insured, and that's why we have as well. From the very beginning, we've been working with an industry leader who has insurance at the back, because, well, if we mess up, it shouldn't pass on to our users losing capital. I think that's just an unfair equation, and which comes to the final equation, right? How do you ensure that your money, first in absolute value and then in contextual value, is growing over time? And that's when you look at hedging against inflation, possibly beating it if possible by investing, compounding your money, diversifying for risk and the like. So I think the biggest takeaway should be understanding where are the points that your banks are indirectly charging you, and if not directly charging you, and possibly how is it that you grow your money from an absolute sense, and how do you grow it from a relative sense? If you can learn this simple equation and dive into the nuances of both of them, I think you're setting yourself up for long-term financial success.
Interesting. I've been wondering for quite a while, and this probably came down to when we look at so many different products coming in, so many different instruments coming in from various people, and especially after in India, of course, people have started to realize that okay, now we can start using crypto, we can buy crypto using the banking stuff, but outside people are already doing that, and slowly and steadily there are financial instruments which are coming back into cryptos. All right. Now the question arises is, do you see traditional instruments like maybe a recurring deposit, very simple things like recurring deposit ho gaya, fixed deposits ho gaye, coming into into the banking with when we start real banking with cryptos. Man, I have another question, but I will talk to that later because that's important. But I just want to understand whether simple traditional instruments can be a part of the crypto banking as well.
So, my belief is that it can be a new asset class. Our expectations would have to normalize. Like, we cannot expect even 1% of the money to move from RDs and FDs to this, right? Because ultimately, we are just banking on the price to rise, right? And that is not a very secured way of parking your money, right? Because of simply the factor that with all these hacking that is happening, with all the money that is can be lost, was lost, and is being lost on an everyday basis, right? Uh, the RDs and FDs are supposed to be the most secured form, which are even protected by the government, right? Then comes your LICs and the likes of it. So I do believe a new asset class which has a good return, especially for millennials, which still is decades away from its actual adoption. That's my belief, at least. So I think that's how the flow would go.
Yeah, so I still think the downside of possibly losing some crypto is totally justified, assuming you were sitting in Venezuela or you were sitting in Argentina or even, forget the hyperinflation countries. What if you're sitting in Turkey right now, where your currency is inflated 25% year on year since the last, what, 7, 8 years? It's ridiculous. So I think having a blanket statement of, there's one way to do this better than the other is not right. Factoring in context is very important, but and when you factor in context, you also have to factor in health of the underlying government, its level of corruption, how long term centric they are when they think about monetary and fiscal policy, and the longer term they tend to be, the better your wealth tends to be protected over the short term, thankfully. But unfortunately, if you look at the data for the last 25 years, over 50 countries have gone through an inflation rate of above 20% at least for 1 year. That clearly tells me that central banks don't know what the heck they're doing. It's not a science; it's a pseudoscience. It's a pseudoscience based on anecdotal evidence and messing up and saying, "Oh, we probably figured it out this time, so it won't happen the next time." And the downside is millions and millions, if not billions, of people suffering, losing their entire generational savings, life savings, and starting from scratch, possibly starving. Right? So I don't know, man. I like if you tell me that you know now like if you tell me that we shouldn't be closely looking at crypto as a hedge for bad monetary and fiscal policy as a blanket statement, it may be true for some jurisdictions, and I can most definitely tell you that it's much better than 50 countries. It's much better than the banking system of 50 countries at the very minimum, which is 25% of the jurisdictions. And I take that today. I think that number is going to increase, especially because of the stimulus that's going on. And that's an absolute win for the space.
Mm-hmm. Okay, cool. So the other question that I had was, of course, even if you try to do something like that, there have to be two things which you have to consider. One is, are we going to decouple from fiat completely when we do banking with cryptos? All right, completely decoupling. हम सिर्फ crypto पे करेंगे, nothing else. Do we see ourselves decoupling from crypto? And of course, the second part is very important, which many people are saying is the Banking Act, the RBI regulation, and the authority and the regulations that are around it. How do we get around all this to create banks which will only do with cryptos? It goes to both of you.
So, see, Shantanu, okay, see, it wouldn't be right to say that we can move forward with one without the other. It's not possible, especially when we have to first go through the step of somebody purchasing the crypto before doing any transaction in crypto, right? Even in a long time period, and as Darshan rightly pointed out, that crypto or some of the cryptos are beating inflation, I think it's very difficult to just assume that and wait for the next person to buy the crypto at a higher rate. That's what I believe. I think it would make a lot more sense if fiat and crypto were to work together. And I believe that right now, instead of the price, the more important factor behind crypto is its technology. I think if that is adopted, so let's take an example. Let's say if RBI were to mandate that all the banks have to adopt this blockchain, and all the money you're able to transparently see where it is going, right? Then the necessity of actually having a Bitcoin or a currency to hedge your money is a good investment class, right? It's a new asset class to invest in. Replacing the entire monetary system, I personally don't see that happening, because giving up that kind of a control, especially in a democracy, it's very difficult. And even though countries except for Venezuela and Argentina, uh, where they have huge inflation, let's talk about Iran specifically, right? They have these black markets where people actually trade forex, right? Even when that gets blocked, even when the government has taken control of it, they still have their independent local currency using which they can go and buy bread. Whereas if you induce a stimuli such as a cryptocurrency where you don't have any central control, or that is being actually held by very few people, right? Now, these very few in future can also be banks because they have a lot of capital, right? So essentially, we come down to nearly the same principle. If every one of us were to believe that Bitcoin is the next big thing, then the most money that is available in fiat is with banks, is with funds, right? These ones are gonna buy these cryptocurrencies, right? And then we'll have the exact same state, that the monetary system is being controlled by a few people rather than being decentralized. So I think these two things need to go hand in hand.
Okay, cool.
Yeah. I think I'd like to touch one point that Mohit brought up, which is the first touch point is buying crypto. Is that necessary? Does that have to be the case moving forward? I don't believe that to be true. I think we've not innovated enough as a space to ensure that that's not the point of it's not the first buy-in. Can't you can't you give part of the interest in crypto? Can't you give cash back instead of stupid air flight tokens or reward points in crypto? Can't you give like I think assuming that the first touch point for anybody with crypto is buying crypto, maybe an assumption that will change very soon, and which comes to the primary question, which is can we see no fiat sometime in the foreseeable future? I think they go on hand in hand. I don't think everybody in the world should have a Bitcoin wallet or any crypto wallet for that matter. Primarily because with freedom comes responsibility, and self custody may be suitable for some of us. It's most definitely not suitable for all of us. People make mistakes. Unfortunately, transactions are. Or fortunately, transactions are irreversible, and the downside of that being, if like most, like it's not, you can't definitively say it's the best thing for everybody, but it's most definitely the best thing for some of us. So I think the world has, I think there is space in the world for fiat. I think there is space in the world for uh, uh, hard metals being an underlying currency, and I most definitely think there is space in the world for crypto being the primary currency too. And we're going to see an entire spectrum. We're not going to see an absolute one or the other. We're going to see, and let me just tell you that hard metal currencies have failed in the past. They will fail in the future. Fiat currencies have failed in the past. They will fail in the future. And cryptocurrencies have failed in the past, and they will fail in the future. So ensuring that you're hedged to a point where you don't lose everything is all that matters.
Yeah. No, it makes sense. I think it is a fair point that probably we'll have to live with both of them in some form or the other. But as probably Vikas in the audience, he commented, and the people saying that, hey, why should fiat only be the touch point? We could always be paid in crypto as a salary. So I'll probably talk to everybody about it now. So good. I think we've talked enough. There are a flurry of questions which I had in mind, but we'll just jump in a bit. I had a question about how will the TCS Quartz change everything for us. But I think there are some questions in the audience from the audience. So Akash, would you like to take it up and maybe?
Yes, so now I can see some questions here. Let's start with the first one. The guy says, I have one doubt on how Indian financial system is going to react with DeFi adoption. I mean, will they go against it? So Who would want to answer this? Or I can just, throw the question to anyone because, as I said, I have the power, right? So, Mohit, Darshan, you go for this one.
They're not. They're blanket. They're not. It's not going to affect them whatsoever. They're going to blanket every cryptocurrency is the same. No matter how decentralized or centralized you are, whatever the regulation comes out, they're not going to make a nuanced difference between DeFi and centralized because I don't think they care enough to do the research. That's unfortunately the truth. And I don't see it as an immediate threat for the centralized banks either. So they're not going to, which is great for the innovators, right? We can do whatever the heck.
Yeah. I think the volume is still very low for it to get affected anyway. But yes, we had a discussion yesterday in which a discussion happened with, of course, Mr. Garg and Nishal Shetty and other people, and we were talking about this exactly as what do we need to show it as? What should crypto be as, and whether the adoption will come if RBI says a go ahead or banks in, but what should we regulate it as? So I think till the time we reach a point wherein a regulation is happening or something is coming in the mind, as Darshan pointed out, that they are very far away from even the integrated research that they need to do before coming up with the regulation anyway.
I'd like to step in here and say that if you look at how crypto has been regulated in more forthcoming jurisdictions, they've always first deemed it as an alternate asset class and taxed it as an alternate asset class too. Hopefully, in a few jurisdictions, we've seen it transition to a second legal tender too. So you would find if there is an intent to regulate, they're either looking at it as an asset first, then maybe transition it to a commodity, and possibly towards the end, once there is a nuanced understanding, deem it a legal tender if it ever gets to that case. We've only seen very few jurisdictions let it come there, but more often than not, it's regulated as an asset first, and then hopefully go down this path.
Okay.
So I agree with Darshan here. See, Gautam, the one who has asked this question, see, ultimately these regulations or the speed at which they'll be formed would ultimately depend on the startup and the ecosystem. If you have enough people employed, if you're pulling in enough funding, if you're pulling in enough clients, users, use cases, the government would have to accelerate it. Right, so it completely depends on how innovative offering, how quickly you're able to adapt to the market. And see, regulations didn't exist for cars earlier before cars were there, right? Where they were just being tried out. So the quicker we adopt to it, the quicker we'll have these regulations.
Yeah. I'm very happy to see. There's a question which comes from a CA student, and who says he's a blockchain enthusiast. Yeah, he says that in India, gold has sentimental value and people store gold physically. Yeah, good question. I think it's a very fantastic question. I think this question directly goes to Mohit as well. How do you make people who are very emotionally attached to us with the sentimental value of gold to invest in digital gold, which is the e-gold which you're talking about right now, which actually has a backing, of course. There's a backing, but then how do you talk about it?
I understand. I completely understand. I think this would have to be a gradual change. So we are bringing in the physical deliveries of gold in the second week of August. So somebody who believes in holding gold physically, they can do that with Oropocket. Obviously, the upside advantage with digital gold is that you can invest as little as 1 paisa. You can instantly buy. You can instantly spend. You don't have to worry about the storage fee. The insurance is there, and all of these upsides are there. But I understand why some people want to hold it low. See, right now, the pandemic that we are in, this has happened in the past, right? Similar pandemics have happened in the past. And the people that have come from them have taken for years good decisions, right? And good decisions being keeping their assets close to them. So I think this is a valid concern. This will gradually phase out as more and more trust develops within a company, a community, or a forum.
Okay, cool. Dhaval is writing in all the way from, I think is Dubai, if I'm not wrong, from Frontier Wallet. What is the smoothest and easiest way to get started with DeFi? I'm fairly sophisticated DeFi user. However, would love to know the opinions of Darshan and Mohit. Something he wants to understand how to get started with DeFi. Yeah, of course. Good, Dhaval. This question is probably in the mind of many people, actually.
Yeah. So maybe the question is why why is it that you want to get into DeFi should be answered before how.
And okay, so we have, sorry, Darshan, I think Dhaval has come on. And Akash, did you bring him in?
Yeah, I brought Dhaval in because I thought, it's his question, so he should be here. I will unmute
Okay,
him.
Dhaval, okay, fair enough. So Dhaval is there. So Darshan, please go ahead. Yeah, yeah.
Yeah, I think if you have a good answer to why you want to get in, that's a good place to start. And assuming the question is how, uh, it's pretty straightforward. You on ramp with a centralized exchange, or you on ramp with a product like Inblocks when they come out with their on ramp product, and you can because of the fact that crypto is totally open, you can move your funds to a MetaMask wallet or a Trust wallet or any wallet of your choice, and yeah, you can talk to the smart contract via multiple platforms. So InstaApp would be a good one. Frontier Wallet would be another. Or you could just directly go to the compounds or the RWA protocol and the like. You could directly go there, but it's a little more difficult to use those platforms. So it's a good place to start would be on ramp with a trusted party and move the funds out to the wallet of your choice and easily plug into maybe InstaApp or Frontier to begin with,
Okay,
at
okay,
least.
cool. Yeah, thanks, Dhaval for the question. I think we're seeing Dhaval here, which
Yeah,
is
so
fair.
Dhaval, is the question answered? Are you satisfied or not? You can unmute yourself and, you can just speak with the speakers.
Yeah, hi Darshan. Thank you so much for your opinion. Darshan, what I realized is that, although I have like significantly profited personally from DeFi and, what we're building at Frontier, I've always been very excited about sharing DeFi with everyone. And that's why, we have been organizing introduction to DeFi sessions, particularly for an Indian audience. And I think, yeah, even with in blocks and rest of the panel, we should definitely make an endeavor to make sure that people know more about DeFi and probably have like an onboarding session so that people can probably make the most of it.
Oh, Dhaval, I didn't know you were part of Frontier. So I'm a
Yeah.
big fan. Awesome.
Thank you.
Yeah, I think you guys should integrate some sort of an on ramp by yourself, man. It would make it easy. I think you're evaluating a few options as well. So do
Yeah.
that. Possibly, do you really believe the problem is an education one?
Yeah, because I think one side of the problem is education. Second side of the problem is, ETH getting congested. So let's say for a first time user, it gets fairly challenging. And let's say, when I first purchased ETH, okay, I invested about $40. Okay, so that was a very small investment when I started off in 2017. Now let's say if someone starts with $40, okay, it gets a bit challenging because just in terms of gas you would end up paying half the amount at times. So if a user is wanting to deploy, say probably mint DAI and then invest DAI in M stable and make about 25% returns, he's already lost, okay, whatever he would make in the next 3 months, 6 months, etc.
I think if the user is looking at all of those points, they've effectively solved the education problem themselves. So
Yeah.
yeah, so
Yes.
if I'm not sure whether the so I acknowledge that gas fee may be a problem, but you don't end up paying gas fees at the time of on ramping, right? So if it's an education one, you should see a lot more people buy in without ever knowing what gas fees are. And if it is yield generation, that is that let's say getting people who have a current exposure in crypto with let's say not a deep understanding to possibly using a yield product like this, there are there are ways that you can take away them from them spending it, right? You can ETH especially lets you as an organization discount the gas on behalf of the user, and I think Biconomy is one such solution that enables that. Argent does it manually. There are a couple of other wallets that do it manually. I'm sure Ravindra and you guys have looked at it too. So take away the first point of friction. You could look at a business model some point where you're getting part of the upside, but take away the friction.
Correct.
All
For
right.
us,
I'm sorry, Dhaval, sorry to interrupt. We are running out of time. We have more questions, from other people as well. I'm so sorry to cut you short, but yeah, I'll have to, bring someone else now. All right. But thank you. Thanks for your question and thanks for your enthusiasm. Shamnu, which question do you want to take next?
No, I think we are running short of time, but there's one thing which probably comes from Akriti, and this basically is a question which was related to yesterday's meeting that we had
Yeah.
with Mr. Garg, and she asked that Mr. Garg said that they treat crypto as a commodity and not as a payment option. So how do you think this will shape the industry and prevent any overlap with if you start banking with cryptos?
I personally believe that this would just be a simple plug-in, much like all the other asset classes. So you can just park your money there, you can utilize it, right, and then build on the services on top of it, like with Bank of Hodlers. You can earn interest on it and make use of all these other functionality that is available. Traditionally, just simply saying that it's a commodity does not change much for the industry right now, right? It's almost going to be the same, except for the regulations that are going to come in, right, which everybody is looking forward to. So I think it's a good step. I think it was surprising for everyone yesterday that he came up with this statement. So we all hope that he had done that in writing a couple of months back.
Yeah, actually. Yeah, he went over a limb and started saying that crypto is fake fiat. It's counterfeit fiat. So anyway, good.
Yeah.
Thank you very much.
Hey, could I just step in here?
Yeah, please, Darshan. Yeah, please.
Yeah, it doesn't matter. I honestly think it doesn't matter. Asset, commodity, currency, instrument of speculation, blah blah blue blue. It does not matter. Does the underlying create value for the people who hold it? That's the only truth that matters. And if the answer is yes, we're going to see long-term growth. If the answer is no, it's going to remain an instrument of speculation. So, okay, let's assume we are somewhere in the middle there, because, well, it's not mainstream yet. So it's either no or somewhere in the middle. So if we are somewhere in the middle, optimistically speaking, what is it that entrepreneurs and developers in the space need to do to ensure that people gain the upside of crypto without necessarily needing to deal with the complexities, be it legal, be it technology, or if there are any other complexities? It's the job of the innovator to remove that. And if we succeed in doing so, we're going to see crypto grow. Crypto's growth is directly proportional to the brain power that the Indian community and the other communities actually put in. And it's also correlated to the legal situation. But we have a free run for the next 9 months, from my understanding. Thankfully, we have a break here, guys. So next 9 months, if we want to see crypto grow, there's only one thing we need to do, which is leverage the upside if possible and remove the complexity and friction points and see whether we're still in the very early days of this being ubiquitous, right? So see whether this could be ubiquitous and have fun along the way. Let's innovate together.
All right. Thank you so much, Darshan. On this note, we would like to end our today's Blockchain e-weekend. I hope you guys enjoyed every bit of it. And let's thank our speakers collectively. Again, there are emoticons down there. We can just give them virtual claps so that, they have taken out their precious time and given us some valuable thoughts. Let's give it up for Airmeet as well, guys. Airmeet is our venue. Let's give it up for Airmeet. Let's give it up for Inblocks Events for doing this every week. We have more blockchain e-weekends for you. And in the end, let's meet next weekend. Same time, 4 p.m. with a different theme at different places, of course. And yes, the same venue. Airmeet will be the venue. And we will look forward to hosting you again. Till then, take care of yourselves, stay safe, and have a great, great, awesome weekend. Thank you so much, guys. And
Thank
see you.
Speakers, we will see each other at the backstage.
Yeah, we will meet the speakers at the backstage. Yes.
Yeah. Thank you very much.
Thank you so much for this opportunity. It was really fun.
Thanks, guys.
Thanks so much.
Bye.
Bye-bye.